Good morning, everyone. Good morning. So, hold on. I know I'm late again. It is what it is. And I've already taken a trade. I've also sort of like took profit already. And I have a runner going. It went for 2.5R. As you guys already know, I can only open one standard lot with this prop firm with Neoma. So I've took out like 0.9 out of the whole one standard lot that I've taken, and right now I just have a small runner that is currently, perhaps it's gonna go even further down. I mean, it's definitely gonna go further to the downside. I don't know if you guys remember, but yesterday I was saying, by the way, can you guys hear me? Yeah, you can, or at least you should be able to hear me. I don't know if you guys remember, but yesterday I was telling you that I've started looking into quarters theory again from that trader Day or something like that. I'm never sure how to pronounce his name. I don't know why. Daye. I don't know. Anyway. Okay, I'm just moving my stop loss at break even for the runner. But the thing is that I started looking into quarters theory or whatever it's called. And I've realized something. And then it also got confirmed to me somehow that I'm looking at the right thing. And it's the following. If you guys remember, during yesterday's live stream, I took a long. And oh my god, this is moving so bad. I took a long. It was over here. Like that. All right. I took this long and I was aiming as usual for 2R, right? Now, the thing is that taking this long trade like this, I took it obviously because it had SMT divergence here and because gold was rejecting from a bullish fair value gap after it took out the low of the Asia session, and it also had taken out all the sell side liquidity. So my trade from a rule perspective, from a rule standpoint, was perfectly fine. However, I then started to go in my favor, and then I decided to collapse the trade. So if you guys remember, I closed half of it once it started to go against me. I closed half of it in a small loss. And then as it started to go in my favor, I've actually decided to get out of it. And I don't know if you guys remember that I said that even if it's gonna continue to move in my favor, I don't care. I just don't feel like it was an SMT that would normally be like a valid SMT to trade. And looking more and more into this guy's stuff on his Twitter especially, I've actually come to understand that, you know, the way in which I personally use SMT is I use it to filter out what is a break of structure and what is a liquidity sweep. So SMT helps me personally to identify when I'm looking at a break of structure and when I'm looking at a liquidity sweep. And what I've realized is that this guy is teaching another type of SMT, SMT, which is like sequential SMT. Oh my god, I'm so sorry that I actually, you know what, I'm not sorry. I wanted to say that I'm sorry that I'm sorry that I closed my trade, that I closed 90% of my trade, but I'm actually not sorry. Why would I be sorry for making profits? What the heck? So this guy uses another type of SMT, where he's teaching about another type of SMT, which is called SSMT, so sequential SMT. And it's basically the SMT, you know, maybe some of you guys already know about this. I have no idea, okay? I'm just new to the game, so hell, I'm assuming that I'm not the only one. So yeah, just bear with me, okay? And if you don't like me mumbling, jumbling about this, you can just, yeah, you can just mute me, whatever. So this guy, whatever, he's basically, wait, what's going on? So this guy is basically, like I was saying, is teaching this thing, this SMT, where it's an SMT between quarters. Again, maybe a lot of you are aware of it. I don't know. To me personally, it's the first time when I've looked into it and it somehow made sense to me. I was thinking about it before I've actually found out about it. And somehow seeing whatever he said about it and whatever I found about it on YouTube and on Instagram and whatever, somehow confirmed to me that I had a good hunch about it and that I should actually follow that thing. So SSMT, it's basically the type of SMT where you don't necessarily look at highs, lows, swing highs, swing lows, whatever. It's basically like an SMT between two correlated pairs that occurs not necessarily between two highs or two lows, but it actually occurs between two quarters. So maybe you know, I mean, not maybe, but I'm absolutely positive you know about the quarters theory, how you apply it. You basically just split every day starting from 6 p.m. New York time. You split it into 4 quarters, each quarter having 6 hours. It's basically Q1, Q2, Q3, and then Q4. It's said that Q1, it's usually accumulation, Q2, it's manipulation, Q3, it's distribution, and then Q4, it's either reversal or continuation. It's these little boxes that you see here. The first one is, so that the Q1 is always gray, and then Q2, which is the manipulation, it's pink. And then we have green and blue, which are distribution and reversal or continuation. And then those 6 hours each 6 hours. It's taken and split into 4 segments again, 4 quarters of 1 hour and a half each, and then each 1 hour and a half is split again into 4 quarters of 22.5 minutes, so 22 and a half minutes, but I just don't go that deep. So in here you can see in my chart, and you've probably seen it in my in this week's live streams, that I have these boxes here, right? So basically the way in which I could have avoided yesterday's trade, and not only avoided yesterday's trade, but actually make sure that I would trade the actual trade that I was supposed to trade, which was this short that occurred here, and that I've marked the CB of that, the 1045 CB on the 5 minutes. You guys remember that yesterday, during yesterday's live stream, I was saying that I don't want the 915 CB to be reclaimed, this one. Now, if you look at gold created a CB, but if you look at silver at that exact hour, 915, it's actually a swing high. It's not a candle in the middle of a move, right? It's actually a swing high. And even more than that, it's actually the high of the third quarter here, the quarter that starts at 9 a.m. and ends at 10:30 a.m. So it's quarter number 3, this one, from 9 to 10:30. Okay, and you can see how gold created relatively equal highs, especially if you're looking at candle bodies, which is what we're supposed to do when we're talking about this type of SMT, where one pair creates relatively equal highs and the other one creates lower highs. And look at how silver created a lower high, and also silver stumbled upon this 30-minute CB that it had here. And then at 10:55, we had like a micro quarter, that 22 minutes and a half quarter, which I just said 5 minutes ago that I don't go that deep into those. I don't go that deep into those in the idea that I'm not looking at those on the 1 minute. I would definitely advise to still use them on the 5 minutes. So you can see that once that 10:55 manipulation quarter came in, price actually went up into that CB and then started to reject off of it. So it was basically like a manipulation into the CB and then coming off of it. Now, the thing about it, okay, and if I somehow had a hunch that this thing having a sequential SSMT would be more powerful to trade that type of SMT than a normal type of SMT where you just look at swing lows. I somehow had that in mind yesterday when I said that I just don't feel like staying in the trade anymore, in the long trade that I took. But today that was totally confirmed to me. Totally confirmed to me. So, and one thing, you guys, I really encourage you that every time you take a loss, or every time your proven strategy proves out to be wrong, in the idea that for example, you take a loss, just always go back and see what you could have done better, either to minimize the loss or to avoid the loss, or even more, to take the trade that you were supposed to take, right? How could you have seen what was the actual move that was starting to unfold, but you were too busy, quote unquote, trading the opposite, the wrong side of the market, like I was yesterday, and I'm totally okay admitting my mistakes and where I need improvement. So if I would have had like a strong conviction about this SSMT thing yesterday, that would have been a very, very good filter for me to know that, okay, what SMT should I trade? Should I trade the bullish SMT here, which seems to be rejecting from this BISI that it created over there after price took out the sell side under the low of the Asia session? Or should I have traded this sequential SMT here, which created that CB, and that would have been like a bearish continuation SMT and not a bullish SMT. And you know, this is a thing that I've always I always wanted to wrap my head around it. How do you choose when you have conflicting SMTs? How do you, or what's the best way to choose between the SMT that has a higher probability of actually panning out in your favor? And right now I am pretty convinced that this SMT, it's actually a very good filter. So just as I was using SMT to filter between breaks of structures and liquidity sweeps, I think that I can actually use SMT to filter between SMTs. What SMT should I be trading? And the trade that I took, this short trade that I took, was precisely because of a SMT that occurred. So if you guys are going to look in here, you're going to see that starting from 7:30 all the way to 9, we're trading inside Q2 of the New York Open, I would say. So from 7:30 to 9 a.m. it's Q2, 1 hour and a half of the Q2 of New York Open. So New York Open or New York Hill Zone, whatever you want to call it. So the thing is like this. This thing, right, that range from 7:30 to 9 created this high and it created this low. Okay? Even more than that, inside that 1.5 hour range, we have smaller ranges, right? We have the 22.5 minute, 22.5 minute ranges. And I always try to look at trading Q2 and Q3 with an aim of going after Q4 or going after the previous Q4. So let me explain. So Q4, the little blue box here that started at 8:40 and ended at 9, roughly, more or less, created this high and this low. Now I'm going to remove that one because we don't need it anymore. So we're simply going to focus on Q4, the smallest Q4 of Q2 over here, the 7:30 to 9 a.m. Q2. So from 8:40 all the way down to 8:45, that's the range that we're looking at. okay? And if I want to mark the same range on silver, okay, I'll see that silver, the high of that range is here, and the low of that range is here, okay? So what I can see now is the fact that once Q1 started, the micro first quarter from quarter number 3, which started at 9 a.m. and it's going to end at 10:30 a.m. So we're talking about this little gray box in here. Once that started, price moved up aggressively, okay? And that was pre NYSE open, okay? It was 9:15. Started moving up aggressively, and it went above the high of Q4, previous Q4, from 8:40 to 9 a.m. okay? So it somehow created an SMT. And I'm not looking here, like I said earlier, a little earlier, I'm not looking at the specific swing highs and swing lows like I would look when I would normally use SMT, but I'm rather looking at what's the highest point and the lowest point that were created during a certain quarter, okay? So if I'm gonna look at Q4, micro Q4 from 8:40 to 9 that happened on gold, then I'm gonna see that the highest high was 8:40, okay? If I'm gonna look at the same interval of time on silver from 8:40 all the way till 9, then the highest one was 9, okay? And so this right here was the SMT. And what I'm trying to say is that let me put up some vertical lines. Is that Q1, the micro Q1, this one that started at 9 and ended at 9:22, 9:23-ish. It went up aggressively and swept Q4 like the previous Q4. And then it started to move down aggressively. And obviously it started to move down aggressively just minutes before NYSE open at 9:30. So that's when I executed the short. Immediately after the 9:30 candle opened. So yeah, I'm still gonna look into this a lot. I'm gonna be testing a lot of stuff with it because somehow it really makes sense to me. It really, really makes sense. And like I said, I feel like it's a relief knowing that I can actually use something to filter between, to filter those moments or those situations when I actually have conflicting SMTs. I don't know if it ever happened to you, but yeah. Wow, you guys are really, really quiet today. Like, yeah, I'm talking about quarterly theory. Yes, I am. Okay. Also, very, like, I would say huge thing to use in your analysis, to be able to figure out what are those moves that are actually the manipulations, because not all the time you're going to see an SMT. So for example, what I've been doing lately is I've been looking at the 6-hour Q2. So the 6-hour Q2 every day, which starts at 12 midnight New York and it ends at 6 a.m. So whatever I see that happens, like whatever obvious PD array, like the most relevant PD array that is being created on the 1-hour chart during or between 12 midnight open all the way to 6 a.m., I'm going to mark that. And once I will have an invalidation of that PD array, so think about it like this. You have 6 hours of price action from 12 midnight open all the way to 6 a.m. During this time, during these 6 hours, there's going to be one very obvious and one very relevant PD array that's going to form on the 1 hour, and it's usually going to form at the beginning of the quarter. So starting from 12 midnight. Like for example, on Monday, if you look at the indicator at the bottom of the chart here, okay, it's this portion of this thing, okay? The pink box, which started Monday at 12 a.m., ended Monday at 6 a.m. Now, that price range on the chart is from this low. Actually, let me just go ahead and draw that. It's from this low. Oh my God. From that low all the way to that high. Okay, so we have this whole piece of price action. Okay, so now to me at this point, the most relevant PD array that formed here in that piece of price action in those 6 hours, obviously it's this bullish order block. Okay, obviously that's the most relevant PD array that formed during that quarter at the beginning of the quarter. Okay, it's this bearish order block, this bullish order block over here. So like I said, whenever I see that PD array being invalidated, then I have the confirmation that that was a manipulation. Okay, then I have the confirmation that that was actually manipulation. So you can see what occurred here on Monday. Starting from 8 a.m., price moved aggressively to the downside. It broke, it closed under that bullish order block, turning it into a bearish breaker. And then we had a retest and then a move lower. Now, that's not singular, obviously. Moving on to yesterday, starting from 12 midnight, okay, this pink box, okay, starting from 12 midnight all the way to 6 a.m., we have this piece of price action. Now, if I'm going to zoom in, to me personally, I don't know if it's the case with you as well, but to me personally, the most relevant PD array that I can see that occurred here on this 1 hour chart, it's going to be this bullish fair value gap that occurred precisely on the 1 hour candle that opened at 12 midnight New York. Okay, and initially, Alexa, pause the music. Initially, I had this marked like this, but I don't know, it seemed like too big. And then I just moved on to the 15 minutes chart. And I simply adjusted it based on the 15 minutes. So I was being left with this 12 a.m. busy on the 15 minutes. And you remember, guys, that I said, does anyone know why that PD array was so important? This is why it was so important. This is why CPI yesterday went up into that now inversion and then moved lower. And then it did the exact same thing with this BISI. It inverted it. Let me show you. And this is basically also this BISI, okay? This one. And this is, it inverted it and then it came back into it. And that's basically when it created that SMT that I didn't take. I didn't trade that short, but yesterday I was saying that this inversion is relevant. And it's relevant for the exact same reason. If we go to the 4-hour chart, if we will go to the 4-hour chart, you're going to see that right now I'm looking at the 4-hour Q2, okay, which started on July 14th at 6 p.m. Okay, so if I'm looking at that piece of price action and I only want to focus on the part of that Q2 that is supposed to be, you know what, it's going to be better seen on the 2 hours, because the 4 hour, it just splits the time weirdly into 4-hour chunks. So if I'm going to look at that first Q, so the accumulation, if you want, the accumulation Q, which started at 6 p.m. and ended at 12 midnight. Okay, so that's basically the Q1 of 6 hours from Q2 weekly, which is basically Tuesday, the whole day of Tuesday. From a weekly perspective, like if we split the weeks into quarters, Monday it's the first quarter, Tuesday is the second quarter, Wednesday is the third quarter, Thursday is the fourth quarter, and then Friday you don't count it because supposedly it has a thing on its own. It's alive. Whatever. I didn't get into details because I really don't want to crowd my judgment and all the knowledge that I have with so many stuff that most likely I don't need it right now. Okay. If I'm going to need it at one point, then I'll know to learn about it. But for now, I feel like I don't need that. So looking at Q1, the accumulation phase, from Tuesday, yesterday, so from 6 p.m., Monday 6 p.m. actually, all the way to Tuesday midnight, so 6 hours of price action. If I'm going to look at that, well, would you look at that? What's the most relevant PDR rate that you see here? To me, obviously, was this huge bullish candle over here. Like I said, okay, this is huge candle. So then, obviously, I wanted to move lower on a smaller time frame and see if I can actually make sense of that candle. So that candle on the 2-hour chart opened at 10 p.m. On the 1 hour chart, I've got the 10 p.m. candle and the 11 p.m. candle, obviously, because I need to look at two candles, right? Because right now I'm looking at the 1 hour chart. So now I'm looking at the 11 a.m. candle, because if I would look at the 10 a.m. 11 p.m. because if I would be looking at the 10 p.m. candle, then I don't see anything relevant on that candle's body. But 11 p.m. definitely huge busy on it, right? So then I wanted to move even lower, even on a smaller time frame, and see the 11 p.m. candle. Do I have any relevant PD array on that candle? Obviously I do, on the 30 minutes. Okay, let's drop even further down and see if I can filter that as much as possible. And obviously I was able to do that on the 5 minutes, on the 15 minutes. Again, it's the 11 p.m. candle over here. And once that got invalidated, it actually became like a point of interest to take short setups, because now it became an inversion fair value gap. And I don't know if you guys remember yesterday at the beginning of the live stream, I was saying, yeah, I'm more inclined into looking for long trades. But I was also looking at perhaps the market will want to reach into, and I was looking at the 1 hour. It was 33.21, if I recall that correctly, the price. Yeah, 33.21 something. And I was looking at this exact price level over there. Okay. Now, if you look at the indicator at the bottom of the chart here, okay, you're going to see that from last Thursday at 6 p.m. all the way to Sunday 6 p.m. So basically it's like Friday's price action. That price action is not boxed by the indicator, because the exact same reason that I was telling you earlier. You don't count Fridays in the weekly quarters. You only count Monday to Thursday, and then Friday you just don't count it. Now the thing is that this low, 33.21 something, was the low of that Friday price action, and it was also the upper limit of a daily BISI. And a lot of you guys during yesterday's live stream, a lot of you guys were looking at price reaching into this BISI on the daily chart, on this candle's body. And it didn't make sense, because historically speaking, fair value gaps that actually are an obstacle in price moving further up or further down, in this case, an obstacle of price continuing to move further to the downside and propelling it higher. Usually those kinds of fair value gaps are not going to be the fair value gaps that are on huge candle bodies. Like, for example, if I look at silver, I would not consider that if price is going to start to move up from here, it's going to be because of the huge BISI on this candle's body. I would rather want to see silver trade into this BISI, okay? Because it's more relevant. And the reason why it's more relevant, it's because fair value gaps that are on huge candle bodies, so huge fair value gaps, those are actually not fair value gaps that price will reject from. Those are liquidity voids. And liquidity voids, price will usually fill the whole liquidity void. It's not going to reject from just tapping into the upper limit of a liquidity void, or it's not going to reject from the consequent encroachment of a liquidity void. And again, making a difference between a liquidity void and a fair value gap, it's really simple. A liquidity void, it's usually a huge fair value gap on a huge candle body. That thing will tend to be filled entirely, usually, and it tends not to be respected. If you're going to take a trade, like for example, let's say, I actually think that there's a good example here. Yes, a very good example. You see this BISI? You can see it, yeah? This one, on this candle's body, okay? That's not a fair value gap, okay? Looking for long trades, just because price slightly taps into that fair value gap and shows M5 or M1 signs of rejection to the upside, that's not a good way to trade fair value gaps, because that's not actually a fair value gap, that's a liquidity void. And like I said, more often than not, actually almost all the times, liquidity voids tend to be filled completely. This is exactly what you see here. Imagine the amount of people that bought here, went long, only to then have this happening against them. Why? Just like I said, that's a liquidity void and not a fair value gap. Okay, so I was looking yesterday at how a lot of you guys in the chat were saying that price reached into a daily fair value gap, and you were referring at Friday's daily candle, the huge fair value gap that you were seeing here, and you thought that just because price was rejecting from this, like so, you thought that it was going to go up. Or you thought that if you're in short trades, just because it reached into that daily BISI, you wanted to get out of your short trades because you were afraid that price will actually reject from that daily BISI. But that is actually not a fair value gap. Like I said, it's a liquidity void, and usually those tend to be filled completely. And even more than that, usually price will usually tend to go to the low of the candle that created that liquidity void. Okay, it's the exact same example that we have here. Okay. Oh my God, wait, hold on, because I'm not that good with drawing, okay? And I don't know why this thing works against me. Jesus! This one. On Tuesday, July 1st. The daily candle on Tuesday, July 1st. That is not, again, that's not a fair value gap, okay? It's a liquidity void. And as you can see, price eventually went down to the bottom, to the low of that liquidity void candle. Because this is how our liquidity voids are usually handled. Price will not just reject from it. It's just going to feel it completely. Okay, so whoa. Let's see what's going on in here. The entry, someone asking, the entry from 1 hour breaker block, right? Yup, exactly, but you have to wait for the breaker block to become a breaker block. I'm eventually thinking that price will reach down into 3306, 3307 ish, something like that. I don't really like to look on the 4 hour for the on the H4 time frame to see the delineation of the 6-hour quarters. If you want to do that, it's actually better to see them on the 2-hour chart or on the 1 hour, obviously. Yeah. Also, from what I've understood and from my findings also, not really done backtesting on this because I'm new to it. So before knowing exactly what and how to backtest, I feel like I need to have a better understanding of the concept and how to use everything before actually going into a backtesting process. Because if I'm just gonna start backtesting with with an incomplete understanding, then I might actually make a mush out of it, and I really don't want that. So, but from my findings, and whenever I want to understand something, I usually don't understand it really through backtesting in the first stages. I understand it through just staring at the charts, scrolling through the charts, looking at hindsight examples and whatnot. And so what I've been able to see also is the fact that at a later stage in quarters, especially in quarters 2 and 3, like for example, right now we are in Q3 of this week, okay? Q3 of this week because it's a Wednesday. So Wednesdays are usually Q3 of the week. Also, because it's the second full week of the month, it's monthly Q2 this whole week, all the way till Thursday or Friday. I'm not really sure where exactly Friday stands in this whole situation. We are in the second quarter of this month, of the month of July. And so usually quarters 2 and 3 from the current cycle will tend to have as drawn liquidity the previous Q4. So if right now we are in Q3 of this week, then there's a big chance that the drawn liquidity for these 2 quarters, Q2 and Q3, so yesterday and today, is actually going to be quarter number 4, Q4 from the previous week. And Q4 from the previous week is the big blue box here that you see. So it started on Wednesday at 6 p.m. and it ended on Thursday at 6 p.m. And the low of that quarter, obviously, is down here, 33.10, where there is also SMT sell side. Ooh. I don't know how to make this so that you can see the whole thing. Uh, 33.24, 33. Okay, so I was saying that usually the current Q2 and Q3 tend to gravitate towards the previous Q4, which in our situation, previous Q4's low is down here, 33.10. So yeah, we'll see if that's the case. I also want to mark this low over here because that's like a 6-hour Q4. Once price will take out this low over here. I think it's yesterday's low. Yeah. I'm going to be mindful of how it breaks that low and make sure that it stays under there because I don't want it rejecting off of there, you know. I just wanted to use that sell side to continue to moving even lower, just how silver is doing that right now. And I also want to make sure that silver is not going to be reaching into the previous Q4 low, which is this one over here, 36.365. Okay. Okay, so it took out that low yesterday. And it should not be rejecting from there. I don't want to see it rejecting from there. I'm getting ready to collapse the trade because I don't like how it's rejecting from there. And we've also entered Q4, which can be a reversal, a continuation or a reversal. But reversal, considering the reversal usually happen after price takes out an old low, which is what price did in our case. So I just want to be careful with it because if I can spare myself some dollars, why not? Someone's saying here, hey Alex, please take a look into this. I've been very successful trading the reaction on very first FVG that's formed between 9:30 and 10 a.m. and then 1:30 and 2 p.m. Market usually creates an order block or breaker on it. So you mean perhaps 1 minute, 5 minutes? And then it says when it retests it, a divergence usually occurs to help confirm the validity of the trade. Yeah, that sounds like a good thing. If you look at very first survey, it got created on the 1 minute. You'll notice an order block was formed. Market then retraces back to 79 fib level with the divergence occurring as it creates the high. Cool. Cool. So you said 9:30 to 10 a.m. 9:30. So between 9:30 and 10 a.m. I'm assuming. Yeah, I'm assuming you're talking about this one, right? And price retraced into here. I'm not sure if that's what you're talking about. But rather between 9, okay, I get it now. So you wait for 10 a.m. and then you, let's say, consider the whole price action that occurred between 9:30 and 10 a.m. on the 1 minute, and then you wait for a retracement above equilibrium of that range into a SIBI, for example. I don't know, am I getting this right? Sorry if I'm not. The 1035 BISI, I would want this to be inverted. Definitely want this to be inverted. I just figured this thing moved. 2403. 2403. Ish. "16 minutes until the current 1-hour candle will close." I'm not really happy about the fact that it might actually want to rebalance this city if it's going to be created here on the 9 a.m. candle. And then continue to move lower. And if that happens, it's going to take me out. And that would be an unnecessary loss. I almost had a 1R. Not really. Almost. You know what I want to do? I want to mark the open price of the current 4-hour candle. And I would not want price to close above this level. Okay, I've closed half of my trade in a loss. So for now, I'm left with $180 profit from what I made today. And in case this other stop loss is going to be taken out, it's going to be an additional $270. So in total, like, I would say $450 as opposed to $560. I think I had a total stop loss. But yeah, once I've saw that the 1034 candle closed bullish back above the low that it just took out, I should have closed the trade or at least secured that break even. Because I said it right, I don't want it to reject from there. And I seen it rejecting and I didn't act. Well, lessons, I guess. There's a thing, I don't know if I should call it, I don't know how I should call it, or if I should call it in any way. But it's like every time I start one of these so-called challenges, growing a small account, passing a challenge in front of you guys, in front, with the public or whatnot, I don't understand. It's like something shifts. It really feels like something is shifting. And it really, really pisses me off. It really pisses me off. I don't know if it's happening only to me or if it's happening to other, like, bigger names in the industry. I don't know if it's normal that it's happening or that it shouldn't. Thing is that it's happening. I don't know why. It's really tough to, how should I say, trade with the public. Really tough. I don't get it, why. It's like you feel threatened from all directions. Oh, what are people going to say if I'm going to take a loss? Oh, what are people going to say if I'm going to blow the account? Or what are people going to say if I do this or if I do that or if this happens or if that happens? Like, it's really, really, really frustrating. Really, it is. I don't know if it's just me or, like I said, if it happens to bigger names in the industry as well, or what exactly that means. And I'm tempted to say that it means that I'm not confident enough, but it just doesn't make sense. Because I know that I'm confident, but somehow it's like I forget about this whole confidence thing whenever I trade in front of a public. It's really weird. What do you guys think? Is it normal or not? What do you think is going on? And what should I do to overcome it? What do you guys think? It's a sign of what? I'm usually not, how should I say, emotionally involved in my trades. I mean, I do get emotionally involved in my trades sometimes, especially especially when I enter a trade and it just does nothing for 1 hour, 2 hours, 3 hours, because it did happen to me. I also get frustrated, but it's a feeling that goes away really fast. But I also get frustrated when, for example, my stop loss is hit by, a few bips, 1-2 bips, and then it just moves in my direction. I feel so freaking frustrated about that whenever that happens. But like I said, it's that's the kind of feeling that goes away quite fast. Thank God I'm able to, move on through losses quite easily without remaining attached to them, even though this is something that I was really remaining attached to in the past. But yeah. Yeah, definitely took me out. Definitely it was a bad thing. Whoa, ho, ho, wow. Just look at this thing go. Crazy. Hitting. See? Look at this. Yeah. Nah, I just don't want to comment about it. If it moves above this, if it turns this into an inversion, then it's going to continue all the way up to 33.52. 33.52. It was so obvious. I was just thinking, like, seconds before it just went up like this crazy. I was thinking, how can I see that this thing is about to reverse? Because like I said, we've just entered Q4, the 1.5 hour Q4 that lasts from 10:30 to 12 p.m. And it's usually a continuation or a reversal. So yeah, we'll see. So how much am I down today? $120. $120 on a 50K account. And in total, I'm down like 0.9% in this account. I can only imagine the number of people that would jump in long trades as we speak, just because they see price moving up like this. Like, it's crazy. And I believe it's one of the worst things that we can actually do is just chase moves, not even trades, not even setups, because you're not even chasing a setup. Like, honestly, I'm telling you with all honesty, I wouldn't have known how to trade this on the 5 minutes, because I want to stay away from 1 minute setups. And because on the 1 minute, obviously, I can see how I could have traded that. Like, it's so freaking obvious. My entry would have been right here. once 1042 closed. And then I would have also had a confirmation over here with an SMT. Like an extra confirmation. But I don't want to trade 1 minute setups anymore. I mean, not with the SMT thing, okay? And yeah, I was actually thinking, how could I know that this thing is getting ready to, to reverse? Besides the fact that we're in Q4 when it's supposed to happen either a reversal, either a continuation. Yeah, we'll see. So 1055, starting from 1055. I think I'm actually gonna continue live streaming for a bit because maybe I can trade it back down to 3310. That'll be nice. Maybe I can trade it back down to 3310. So I'll wait until it reaches into 33.50, 33.52, and go from there. See if I'm going to get a chance to write it back down. Oh my god, it's crazy. Wow, huge move. Looking in hindsight, obviously, because it's something that I do all the time, looking in hindsight right now, my brain says, well, you could have seen that the 945 CB was being inverted. Obviously, I could have seen that. And it got inverted by the 1045 candle. And then the mind says, well, you see, once the 1050 candle went down, created that small SMT on the 1 minute, and then started to move up, you could have gotten into a long trade. And yeah, I know. But it's not my model. You know, I feel like I have such a big resistance in my head to all these entry models that are not like the one I use, that are not my entry model. And I don't know if it's normal. I don't know if it's normal. Actually, you know what? What am I talking about? Of course it's normal. Oh my god, CPI low. Of course it's normal. Don't ever trade anything unless it happens with your model, okay? Just don't. So if we think of it in terms of quarters theory, right? Oh, okay. Yeah. Now it makes sense. Now it makes sense. We had Q1, which is Monday, accumulating all this range, right? And then we had Tuesday, Q2, which is manipulating, okay, which is all the way till here. So all this thing. And then we had Q3, which is the current one that we're in Wednesday, right? Which is distribution. So it's distributing the long orders that it accumulated. No, it's actually distributing against the short orders, the retail short orders. Yeah, it's distributing long orders against the retail short orders. And it did that beginning with the 1.5 hour Q4, which started at 10:30. Right here. At the very bottom over there. Yeah. Well, it's good that I can see it in hindsight. After what had occurred. Still okay. Okay, so it reached into that SMT buy side that it created yesterday. Here. Yeah, and apparently it's just going to use that to pair it with further bullish orders. Okay, guys, well, I'm not going to chase this whatsoever. And it's likely going to continue to move higher. I don't even think it's going to create any sort of pullback or something like that. I honestly don't think. So might as well just call it a day. It is what it is. Talk to you tomorrow. Bye.